Good morning, traders. This is Nick Mastandrea from Market Tea Leaves. Just wanted to point out a simple example of how market correlation can be used in terms of daily trading. Currently, right now, what we're looking at is a futures contract for the DX, which happens to be the US dollar. We see that around 10 a.m. that the US dollar has reached a peak or has hit resistance. This green line here represents resistance, and we see that it's hit a high of 79,310. We also see as time goes by what's happening here. What's happening is the US dollar is starting to degrade. Now, if we take a look at another currency, in this case it happens to be the Australian dollar, we see something else that happens around 10 a.m. At around 10 a.m., the Australian dollar hit a low of 1.0378 and then immediately began to go higher. Again, this is market correlation in action, and basically it is likened to a seesaw event, or a seesaw effect, if you will, whereby the US dollar either gains strength or loses value, and a foreign currency likened to an Australian dollar will go up in value or down, depending upon what's happening with the US dollar. We can try and look at it another way. We can try and take a look at the US dollar. And at the same time view the Australian dollar. I'm going to try and see if I can capture that for you. This is 10 a.m. on the US dollar. This is 10 a.m. on the Australian dollar. And we can see again it has a kind of a seesaw effect, whereby the US dollar, once it hits a peak and starts to degrade in value, the Australian dollar will actually increase in value. This would be an example of a classic. This is an example of a classic market correlation in action. I hope this helps, and have a great trading day.